As we all might know, earning money is in these days just not enough to lead a stable life, with savings playing an extremely crucial role in determining our future. While there are a number of ways to earn money, there are very few smart methods to save it, which is why it becomes extremely critical to make the right savings or investment plan. The NSC and the ELSS are two such options. When we talk about the features of each of these, the NSC has a minimum investment of ₹100. The maximum investment that you can make and can be claimed for tax deduction is ₹1 lakh. The period, as I mentioned earlier, is 5 years or 10 years for the NSC bonds. The risk factor, the NSC is an extremely low risk investment. The interest rate is a fixed interest rate of 8.5% for the 5-year bond and 8.8% for the 10 years bond. Hi everyone, we are going to be talking about ELSS versus investing in the NSC, or otherwise known as the National Savings Certificate, for the purpose of tax saving. First, let us understand what the NSC is. The National Savings Certificate are bonds issued by the government to inculcate the habit of saving among Indians. These bonds can be purchased from any post office with a maturity period of 5 or 10 years. When we talk about the ELSS, as we mentioned in our videos previously, ELSS or equity-linked savings schemes are closely related to prevailing market conditions, are eventually nothing but a diversified equity mutual fund with a 3-year lock-in period. The frequency of interest accumulation on the NSC is half-yearly, as the interest is compounded half-yearly. When I talk about a guaranteed return, yes, the NSC return is guaranteed by the government, and it is also can be used as a tax deduction under Section 80C of the Income Tax Act. The tax liability, I think it's very important to note that the interest that you accumulate year on year on the NSC is taxable. A lot of people ignore this fact and assume that the interest of the NSC is also tax-free. Let's discuss the several features of the NSC. Firstly, the NSC comes with the option of investment for 5 years and 10 years. Talking about the interest rate of the NSC is 7.6% currently, compounded half-yearly. Also, extremely important to note that the interest that you accumulate on the National Savings Certificate is taxable. A lot of people are mistaken in the assumption that the interest of the NSC is also tax-free, just like the investment. There is no limit to invest in the NSC. However, you get a tax break for an investment up to 1.5 lakh rupees. The interest rate for the period ending October 2018 was 7.6 and revised upwards to 8%. It is important to note that, as in the case of other small savings schemes provided by the government, the NSC interest is also revised every quarter. The minimum investment for the NSC is ₹100 and then can be done in multiples of 100. The NSC investment can be done at any post office by providing your KYC documents and getting started. I would like to make a simple case of comparison between the NSC and the ELSS, or the equity-linked savings schemes. The equity-linked savings schemes, as we all might know, are diversified equity funds with a tax-saving benefit. They have a lock-in period of 3 years. Talking about the NSCs have a guaranteed return. As I mentioned earlier, the returns on the NSC are revised every quarter. In the case of the ELSS, there is no guaranteed return. However, if you make the investment and stay invested for a period of 3 to 5 years, you could possibly gain 12 to 15% as returns, which we have seen historically over several periods of time on ELSS funds. Hey incredible investors, if you learned something new today, please like this video. If you would like to share what you've learned with your friends, family, or others who could benefit from this learning, please share our video. And if you would like to stay in touch with more personal finance topics on how to manage your money better, please subscribe to our channel. Until then, happy investing. Thank you.